All right, so I am Ali, and I did Humana healthcare sector. So I'm going to start with the overview, and I'm going to go over the investment thesis, the industry outlook, the company overview, and then the valuation. So to start off, for the investment thesis, on November 3rd, the price was 423, and from there, I was expecting a return of 6.95%. But since then, it has decreased down to 406, which is at today, with the market just opening now. Just increased 407 actually, but so I'm expecting the return to be a little higher because of that, with the target price of around 454. So in March, the 52-week low was 208, and then the 52-week high, as of November 3rd, was 449. Since then, it's actually been higher than that. It hit 474 and then has backed off. We have a dividend yield of 0.58% and a market cap of 56 billion, which is slightly over the enterprise value. So it is slightly overvalued on that sense. So Humana is committed to helping its employees as well as the beneficiaries getting the care. They really strive to make sure everyone is taken care of. And you can see that at the bottom right there, at the 92% of Medicare members are above 4 stars. That means that everyone's getting the care they need and they're recovering quickly and they're doing well. Also, another point Humana wants to make is they acquired Enclara Healthcare, which is a hospice pharmacy. And this just allows them to increase their smallest sector or segment right now, which is only about 1% of the revenue, which is the pharmacy part. And they're trying to increase that right now, the revenue. So that's why they got that. And they're also trying to keep prices lower for these medicines that people are going to get. And that's part of that. I'm recommending to buy. It's got a current price of 407. This is decreased since November 3rd, and a target price of 453, which it's already gone past. I believe it's going to come back up to that and settle right around there.
What can I ask what the target price is based on?
Yeah, just some analyst expectations.
Is it based on PE or price to book or enterprise value to EBITDA or what?
Yeah, the EBIT DVA. I did it in the DCF model, and came out with this price.
So that target price, is that a target price based on the sell side analyst, or is that your target price? Or?
No, this is my target price.
Okay.
Yeah, that was based on your DCF model, I believe, Ali.
Yeah. Yeah.
Okay.
So some risks that I see to Humana are outside competition, obviously, from United Healthcare or Centene Corp, Anthem, Blue Cross Blue Shield, and Cigna. These are obviously big players in the game as well, so Humana has to be ready for that. But Humana really drives their strong value with how they're constantly innovating their plans to make sure that the beneficiaries are going to choose them, because the beneficiaries do have a freedom to pick the best plan for them. And then also another risk I saw was a lack of employee care. If the employees aren't really taken to Humana's mission and caring for the beneficiaries, then their whole plan's kind of going to fall apart. Clearly, the employees do care right now because 92% of their Medicare members are above that 4-star rating, showing that they're getting the care that they need. So the other stock that we have in the healthcare sector is Bristol Myers Squibb. It's a biopharmaceutical company. And the reason I feel that Humana would be good with this is because it kind of goes to the other side of this. Bristol Myers is actually developing certain drugs, not in the COVID-19 drugs, obviously, more just like the cancer drugs and then psychiatric disorders, stuff like that. So Humana plays the other role in that, in giving the people the insurance and the care, the coverage they need so that they could get these drugs if they need it. So I believe that they would balance well. Then for the industry outlook and overview, this industry has multiple parts to it, from the services to manufacturing and pharmaceuticals. And in the future, I believe it's going to grow quite a lot. I believe a lot of people are going to start investing into it a lot more with COVID and everything. There's going to be quite an increase in healthcare related jobs. This was before COVID. 3.2 million more healthcare jobs are going to be added, and I believe that number is going to go up. And also another big thing that people are trying to do with COVID right now because of this is bring some of the production back to the United States for certain pharmaceutical ingredients like APIs, which are mainly gathered from China and India. They are, however, very pollutant, which is a reason that some people don't want to bring them back. But overall, I think that's going to help increase this industry a lot and help it grow. For the peer group analysis, Humana sits well above it. Humana sits in a strong position with its peers. Anthem has a 12.66 PE, whereas Cigna has a 12.05 PE. And so Humana has a PE of 18.28. So they're well above some of their peers, as you could see. And the median for their peers is 17.01. So they are above that as well. However, United Health is higher than them at 18.59, but they do sit right above the top 5 competitors right there at number 2 under United Health. So Humana is a healthcare company in the healthcare sector based in the United States and Puerto Rico. They have a niche in government-sponsored programs, so Medicare Advantage plans, Medicaid, military TRICARE programs, and they are also a leader in standalone prescription drug plans for seniors. They also offer employee-based plans, mainly for small businesses, along with specialty insurance like life insurance, dental, and vision. And so their commercial healthcare, that's going to be like outpatient surgery centers, dentists, primary care physicians. That covers around 20 million people. So it covers a vast amount of people in the United States. And they also have seen that grow. On November 3rd, their outlook for Medicare Advantage members grew for 2021 in the future. So we are seeing that expanding. For some of their management, President and CEO is Bruce Broussard. He spent his entirety of his career in the healthcare sector. And before this, he was a president and treasurer at Continental Medical Systems for 7 years. He was then a CEO at Harvard Dental for 3 years. And lastly, he was the CFO at US Oncology, which was then taken over by the McKesson Corp, and he was there for 6 years. On the right, you see Brian A. Kane. He's a CFO of Humana. He has a pretty extensive background. He went to Harvard and Stanford, 2 great schools, very well heard of. And then also started at Goldman Sachs for 17 years, handling client relationships and financial transactions for tons of companies around the world. And then on the bottom left, you have Timothy Huval, who's the Chief Administrative Officer. Prior to this, he actually worked at Humana as a Chief Human Resource Officer from 2012 to 2019, where then he got promoted right there. And he was also in 2002 till 2012, he was a Senior VP of Consumer Services at Bank of America Corp. And he's also a director of the Delaware Children's Museum, showing that he cares more than just about this, he cares about children as well. So revenue breakdown by segment. That 1% right there, the healthcare services, that's the small segment I was talking about before, where the requirement of the small company they got before, I apologize, it was the hospice pharmacy. That's going to increase their revenue in that segment. That's what they were trying to do with that acquisition there. And also, then you got the retail segment here, which is the largest part of Humana, making up 87% of it. That's going to be the Medicare, the Medicaid, and then the fully insured. And then the 12% is going to be the specialty care, and then the military services, but that's going to be like dental, vision, life insurance as well. So then the legislation and regulation. So Humana does really care about keeping the prices low and everything like that. And so 2 of these suits kind of show that. They filed a suit against Quivitech, and then they also filed a suit against 37 other pharmaceutical companies. That was in 2019, the bottom one, and the one against Quivitech was recently, as you can see. But so for the one on the bottom, these companies were increasing some of the generic drug costs by over 1,000%. and they couldn't use the excuse that it was to keep up with the rate of inflation because it was about 3 to 9 times the rate of inflation. So they were clearly raising the cost to try and get more money out of the healthcare companies. And also another thing, the Medicare waivers in response to COVID, that was the government just trying to make it easier for everyone to get the exceptional care they need during these hard times. So for the valuation, the undervaluation here, so Humana has beaten EPS in the last 5 quarters in a row. As of November 3rd, it's actually 6 now. On November 3rd, they beat EPS, profit, and revenue expectations. So this is now 6 quarters in a row. I believe it's going to continue to go and continue to beat expectations. We do see a decrease into the negative area right there for Q4 2020. I still think they're going to beat that expectation and be a little higher than that. It may still be negative, but they've constantly been beating expectations, and I continue to see that. Into Q1 of 2021, we do see them rising again and continue to grow. So I'm excited about that. And so for revenue, Humana's had constant revenue growth over the last 5 years with a growth rate of 9.05%. And it did start out a little slow in 2015, 2016, 2017, but then we do see it accelerate in 2018, 2019, and through 2020. And it kind of excites me because through my DCF, I did see in 2021 and 2022, it does hit 80 billion revenue. So they are still growing and increasing revenues for the future. And for the EPS of Humana, this has grown since 2015, 61.8% over the last 5 years. So that's quite an increase, and they're accelerating at a great rate. This means that investors are willing to pay more for the company as it grows, and they're not decelerating. They're just constantly accelerating and moving up in the ranks. Thank you.
Great, thank you, Ellie. What was the company? Was it Unclara that was the one that they merged with?
Yeah, it was Unclara.
Yeah, so that sounds promising. Oh, no, that's fine. That sounds promising, though. Does anyone have any questions for Ali regarding Humana and how it will fit into Thunder Fund along with Bristol Myers, or how it will complement the fund?
A quick question. Does anything coming out of Washington affect Humana? Change in the president, or talking about rescinding Obamacare or changing any legislation? Does that affect them?
Yeah, so they have a lot of government-sponsored programs. So if the government were to add more healthcare plans or take some away, I mean, Humana is in the government, so they're going to get a lot of those plans. If the government goes to increase more plans for people, then Humana will probably get a lot of that that business. So could see an increase in the revenues. But if they do take some of those things away, then obviously Humana could lose some business from that.
I mean, last I heard, it sounded like the Supreme Court was very tentative about overturning Obamacare, and I would think Joe Biden would be on the side of continuing that. So that would probably be beneficial to Humana, especially you said they're in the more in like Medicare, I believe you mentioned. And they mentioned more of supporting that that side of things. So that would probably be very, very promising for your company as well.
Yep. Yeah, they have a lot of the government-sponsored programs. That's kind of their niche. So they're in that Medicare, Medicaid.
Interesting.
Do you guys have access to Bloomberg or FactSet or something like that?
Yeah, we have access to Bloomberg.
So I guess I want to know, so I'm looking at some of the sell side target prices on the stock. Morgan Stanley's at 500, Piper's at 495. Let's see.
Bank America's at 500.
Yeah, Truist is at 475. Stevens is at 490. So I guess the Jefferies is at 495. I guess what I want to understand is why. So your target price of 450 is based on DCF. So I'd want to understand what's the delta between your target price and everyone else's target price. What are they using? Are they using more of a PE multiple, or price to book, some other valuation metric, just to understand what's the difference in the two approaches, and not to say their price target's right and yours is wrong. I'm not implying that. I think it's good to understand what is the difference in the thinking with their target prices and yours. So I just bring it up because it's it's almost a 10% difference, which is not insignificant for a company this size.
Yeah, no, that's definitely a good question. So I mean, I definitely did this a little while. I did it on November 3rd, so it was quite a little while ago. Since then, but I think they probably might have done it with the PE multiples, like you were saying. I did mine with the EV EBITDA. So that's how I got to mine. But I do think it could go higher to like what some of the other prices are, like 495 or 500.
Mm-hmm.
Yeah, Lee, yours was almost a month ago.
Yeah.
Yeah.
I think Dan.
What's happened? What do you think is the biggest risk in owning the stock?
Probably just honestly the not knowing where the future is going to go with healthcare, really, like what with the question before with Obamacare. I mean, it most likely will stay, but if it does disappear, then that's going to take a big hit on Humana and their government-sponsored programs that they have. So that's definitely a big risk playing with this, but there isn't a great chance that it gets overturned.
Good. Thanks.
Yep.
Ollie, how is Humana performing comparing some of their competitors?
Yeah, currently they're right under United Healthcare, but year over year they've been up over 60%, which is more than United Healthcare. United Healthcare has just kind of been sitting kind of flat, not moving a tremendous amount. But since March, they've also increased over like 30%. So they're doing quite well.
Sounds good.
Ali, do you feel better recommending
That was going to be my
Humana?
question too.
So, Ali, do you feel better recommending Humana with the results of the election? I mean, would you feel differently about this stock if Trump was reelected, knowing that he had mentioned cutting back on not only Obamacare, I mean, we all know he put that through the Supreme Court, but he had also talked, I believe I had heard, of cutting back on spending on some senior programs such as Medicare and so forth. So would you feel differently about this stock if the election results were different?
Yeah, I think I would, because that would definitely increase their revenues a lot if Obamacare got overturned, because that would take a lot of the Medicare and Medicaid out, like you just said, for the senior programs. And that's kind of the niche that Humana has in that market. So that would take a lot of the revenues out for them.
Okay. Any other questions?
Is the intent to reduce the Bristol Myers and buy the Humana, or have both of them?
I believe it's to have both of them because Bristol Myers only holds about 6% of the portfolio. So it's not too much of it right now. And in the sector, we could have up to 15%. So we could have room for both of them.
Okay.
And Kurt, on Monday, what we'll do is the students will sit down and they'll go over the presentations and the numbers, and together they'll make decisions as far as which companies they'll move forward with. Just because a student presented a company doesn't necessarily mean that we will move forward with it.